Let's bring in our next guest. We got some breaking news. Got Jenny Horne joining us, markets correspondent here on the network. Jenny, another jobless claims number that looks pretty good.
I know, not looking too bad here at 201,000. That's versus the expectations for around 214,000. And remember, prior was around 211. So continuing to see that number lower and lower, which is exactly, of course, what the direction of the labor market wants. And of course, what the Fed wants, frankly, as well. And you look at the continuing jobless claims, which did come in around 1.86 roughly million. That also was actually slightly beneath what had been forecasted. That's the one that tends to be a bit more, I'd say, diverging from the estimates, and also comes in, I mean, this actually came in slightly higher than what we'd seen previously. So a bit of a mixed read, but then also on a 4-week average, we do see jobless claims still come in around 213,000. So that does put it pretty nicely below the 223,000 average we had seen previously. All things considered, I mean, I was trying to find like any read we could see where a number that was better than expected could be seen as negative. I feel like we're in this market now where good news is somehow perceived as bad, especially following yesterday. But it's really hard to make that case here because basically employment is continuing to improve and we're heading more and more towards a even better labor force. I mean, it's hard to find anything wrong with this number because it's another sign of strength from the jobless perspective.
Yeah, definitely another, and the Fed watches this number. It's one of those weekly numbers that we get and reflective of what we've seen in the labor market. It's still strong. People are still out there spending. The economy's doing well. Higher rates, but can the economy push back against that and get comfortable with the 10-year at 4.7%? We'll continue to watch that. We got non-farm payrolls later this week on Friday. Also, Jenny, let's get into a discussion about a couple stock names that are moving. First one we're going to take a look at is Palo Alto Networks. This 3 downgrades so far this week. I thought everybody needed cybersecurity. Everybody was hiking their price targets as late as last month. Now we're starting to see a reversal in some of the analyst commentary, right?
We are. And I think, yeah, this is interesting because I would say that of all of the tech names, actually, I think the cybersecurity space is at least one of my favorites just to comment on, frankly, because of its resiliency. I mean, CrowdStrike is a perfect example of that. Obviously, different company, but speaks to the demand we've seen, which has, of course, also benefited a name like Palo Alto Networks. But Street today, fairly more mixed, as Deutsche Bank did give a broader note, actually pretty pessimistic on a lot of these software names, but they did downgrade Palo Alto to hold from buy. Price target cut to 190 from 207. And they did say that 2025 is likely to be a tough year for cyber consolidators. They also do say that right now they're downgrading against this view, frankly, of customer preferences titling towards the best of breed over the best of suite within the cyberspace, they said. Though they do not say this is a long-term quality on their business, which I think is important to note. They did say 2025 will represent a tougher operating environment as this is one of the leading cyber platforms really against now these lofty expectations that seemingly embedded this persistent consolidation tailwinds. So they just think, I think, basically to summarize, that things have gotten too far ahead of themselves. We did also see a note out of BTIG that also downgraded Palo Alto Networks to neutral from buy, no price target. And they said that after viewing their core network security target market and the drivers within their higher growth next generation security business platform, they no longer think the company is sustaining this 15% plus really growth story. They also see limited upside to what we're expecting as far as the recurring revenue. And they said we could see deceleration faster than even expected. So perhaps even more negative from BTIG today, but not encouraging that analysts are doubling up. I always say you have to take these notes with a grain of salt, but similar tones from both of these notes today.
Yeah, and that comes on the back of Monday's Guggenheim downgrade, where they put it to a sell with a $130 price target. Kind of a head scratcher, but maybe valuations on some of these tech names in the cybersecurity space getting a little bit overblown. Maybe that's some of the reasoning, but I don't see demand going away for cybersecurity anytime soon, Jenny, with all the hacks that have been and are probably coming down the pipeline. So, yeah, we'll continue to watch that one. That was one of the big winners in 2024. On the other side, Adobe, cloud stock, that one got downgraded also today too, right?
It did. So Deutsche Bank, same analyst, but somewhat of a different note, but also negative, frankly. So downgrading Adobe to hold from buy. Price target also cut pretty substantially to 475 from 600. They do believe Adobe will continue to really build out this traction within its Firefly and other generative AI offerings, but they expect the stock to remain range bound within the momentum right now positively. They believe already reflected in their financials. Though they did say Adobe's management commentary could really be positive and continue to be actually a benefit and also provide some upside for Firefly. They said they're yet to see any major impact on financials, which I will say I have been using Firefly because I'm so curious about it, because I've spent so much time learning these various Adobe products that it's almost frustrating to me now there's tools that make it so easy. And I've always said that's their competitive mode. It's the difficulty to learn these, but they're best in breed as far as like software and video and photo editing tools. But Firefly is frankly amazing. I mean, I'm in the free trial stage right now. It concerns me because AI is not going to be this rising tide that lifts all boats, as we already know, frankly. But I think that Adobe's business model remains one of the most threatened, frankly, because you lose that somewhat of moat where those that have learned go back to those products. I mean, if anyone can use Photoshop as freely as I've been using it with Firefly, I think that's a big problem.
But the way that I look at it, Jenny, is I see Oliver, at his desk creating images using AI on some of the other platforms. Is that going to eat into their competitive moat that you talked about? Because if it's easy enough to do it on Gemini or ChatGPT, where they've got image creators now, that takes a little bit of luster away. I mean, the stock's off 35% from 52-week highs already.
You know, I'm shocked that Oliver Reddick isn't using Paint or something from like 2005. But I will say that I do think that all of these various like mega tech companies, like Apple, Alphabet, for example, are starting to get more creative with their photo offerings. Like Apple's already said they're going to unveil more and more of the photo editing type software just within your iPhone. So that's a concern as well. I've always wondered how long it would be that Lightroom, which is Adobe's photo editing tool, how long they would have this like basically monopoly on the market. Frankly, I don't know if those days are we're seeing more days of dominance ahead, because right now I think all of these major tech names are starting to take a page of their success. And yeah, the story for Adobe concerns me, but I do still very loyally use most of their products. So I guess I am a bit of a hypocrite there.
Yeah, stocks pulled back pretty sharply over the last 11 months or so. All right, great stuff. Thanks to Jenny Horne, markets correspondent here, breaking down a couple stories in the data.